Good morning, everyone. Welcome to the Genghis Weekly Investor Briefing. My name is Damaris, the Marketing Manager at Genghis Capital, and we're happy that so many of you have joined us this Monday morning. Today, we'll be reviewing the macroeconomic outlook and the fixed income market, thanks to the presentation by Churchill Ogutu, the Head of Research at Genghis Capital. Then Kevin Ngige, who's our equities dealer and the host of the newly launched monthly financial chats webcast. He'll be giving us insights into the equities market. Completing our holistic overview will be Mathew Kabeere of FX Pesa, EGM Securities. Mathew will be telling us what to look forward to in the global financial markets. As you are probably aware of, Genghis CDS clients have access to global assets such as international stocks, indices, and precious metals, thanks to our partnership with EGM Securities, and Mathew is here to tell us about the opportunities that are in these markets. The recording of this webinar will be available on the Genghis YouTube channel, so be sure to visit and subscribe. You'll also find several other helpful videos on a variety of topics and investment products, including the monthly financial chats, which we launched on Friday. As an attendee, you'll also receive an email later on this week with a direct link to this particular video. The Genghis Weekly Investor Briefing is interactive and it empowers you to get your question answered by our panel of experts. So please feel free to use the Q&A tab to send in any questions or use the chat function for your comments. Thank you and welcome again to the Genghis Weekly Investor Briefing. I think we are ready to go. Churchill, over to you.
Thank you, Damaris. Good morning to all our participants this morning. Happy International Women's Day to the ladies on the call too.
And how could I forget? My apologies. Thank you for that, Churchill.
To let the cat out of the bag, I know Kevin will be sending you a gift hamper later on this day, so just keep an eye on that.
Thank you, thank you. I will be anticipating.
Kevin. Right, so let me start. With the macroeconomics and fixed income. So the review of last week, it was light. We had the Purchasing Managers Index for last month. Basically, this is a pulse of the private sector sentiment in the economy. We saw that the print, ideally, anything above 50 shows expansion in the review month, and anything below 50 shows a contraction in the review month. So we saw a dip from the print, which was 53.2 in January, to 50.9, which was an 8-month low in the month of February. So that was the print that came out last week. This week is still quite light. We're still expecting the unemployment rate report for the final quarter last year. For the third quarter, the number was 7.2%. So we are still keenly monitoring the publishing of this report. Ideally, it should have been out by end of February. There's some delay in publishing of the report, but we'll still be keeping an eye on that. So moving on to the fixed income. For the T-bonds market, secondary markets, the overall activity was 18.4 billion, which was an increase in the order of 22% week on week. The trades were majorly on the infrastructure bond papers, which was spread out across that segment. In the weekly T-bills, we saw that the overall bids that came was 33.8 billion, which was a performance rate of 141%. And we've seen that this was the third consecutive week whereby the performance rate was above 100%. So just telling us that there's still some risk on sentiment on this part of the in the discounted securities segment. And just looking at the yields, they also went up across the tenor at the weekly auction, and on a year-to-date basis, you're seeing that they've gone up slightly. They've gone up in the order of 0.4%. That is across the 91-day, 182-day, and 364-day T-bill segment. Moving on to the liquidity trends, the average interbank edged up at 0.67% week on week to 4.87%. Looking at the open market operations, CBK was majorly biased towards liquidity mop-ups through the term auction deposits. They received bids totaling 31.9 billion, accepted 28.5 billion at a weighted average of 5.938. So from that, we are seeing that it was telling us mixed signals in terms of the liquidity. On one hand, we are seeing that the average interbank is going up, which is an indicator of some tightness in liquidity. But on the other hand, we are seeing that CBK is coming in to mop up the excess liquidity. So that's just pointing to some mixed signals. Net domestic borrowing, in our estimates, we are at 323.1 billion, which is around 60% of the revised 540 billion target in the current financial year. So our week's trade is the primary bond issues that were announced last week, which is a reopening of two bonds. The first one is the 10-year bond that was issued in the first 10-year bond that was issued in 2019. Currently, it has a maturity of 8 years with a coupon rate of 12.44%. The other one is a second 20-year paper that was issued in 2018. Currently, it has a maturity of 17.4 years and a coupon of 13.2%. So it's slightly higher coupon rate than the first one. CBK is targeting 50 billion for budgetary support, and the withholding tax on these two papers is 10%. So our recommended range, bid range is slightly higher than the implied deals for both papers. For the first paper, that's the FXD1 2019-10, the implied yield last week was 11.9%. Our recommendation is at 12.1% on the lower range and 12.35% on the upper range. So ideally, we are seeing that it will be priced at a slight premium in light that the coupon rate is above the recommended bids of 12.1 to 12.35%. But nonetheless, comparing with where the implied yields are, which is at 11.91%, we are seeing slight discount from where we are at the moment. The same also goes to the FXD2 2018-20, whereby our recommended bid range is between 13.15% to 13.25%, which is more or less where the par value is. So that's our week's trade. So let me stop it here, and Kevin will take us through the equities bit.
All right, so as we set up the screen, I think the week was, as we spoke about last week, as expected, Safaricom, we saw Safaricom starts to shed as we approached Friday. The book's closure was 5th, which was last week on Friday. As such, we expected to sort of just come off this week by at least 50 cents, which was around the dividend they had issued. Given that, we were looking at activities throughout the week. We mostly noticed something weird with foreigners accumulating some of the Safaricom shares that locals were exiting. So one of the reasons we attribute to that is just as a long-term buy. I think we've seen that on previous recommendations we've given, and we might continue to see that. So that might continue to support Safaricom, despite everyone expecting it to get to around 30, 35, 36 levels this week. As you can see, NSE was down 2.2%, again, attributable to Safaricom, which accounts to around 57% of the all-share index. NSE 20, which is an index of the blue chips, was up 1.3% due to some good news through the week, especially on share buybacks. We saw that on Limuru. We saw that continue on NSE. Turnover decreased 32.5% to 2.1 billion. With foreigners mostly exiting on the blue chips. Top gainers, again, as I've mentioned, Nation Media, due to the share buyback story. We've seen top losers, East African Portland, Longhorn, and Samia. Again, some of these due to the pandemic, especially on East African Portland Cement, which has seen subdued demand on the prices. Longhorns continues to suffer due to delaying payments, and again the long closure we had on the schools due to the pandemic, and Samia again due to the different business shift. If we can go to the next slide, Churchill. We've mentioned about participation, 59%, net outflows, exit, BAT Kenya, KCB Group, Equity Group, EABL, Safaricom. Most of these again cause due to the rally we had seen, and now we expect them to come off, especially post-div. Top traded again, the blue chips, Safaricom, 57% of all activity on the bourse. EABL, of course, has seen quite some traction over the last 1 month. Equity, KCB, the second cluster of turnover, of pushing turnover on the bourse, which is the banking sector, and of course, BAT and the manufacturing. Churchill, next slide. We've mentioned this, Kenya, we connect down 2.2%, again, mainly attributable to Safaricom, which we saw it shared around from 39 levels to 37. As we can see, our market PE in Kenya is 11.9 times, which is, I think it's the only second double digit in our basket of countries here, so behind Egypt. So we seem to be fairly overvalued, but we might see that start to come off, especially as prices recover, like Safaricom getting back to levels of 36. Corporate calendar, things to look out for. BAT Kenya, final dividend this week, 41.5, book closure 16th April. Kenyan, 30 cents final dividend, book closure again on 29th April. And Stanbic Holdings, which have been quite active over the last couple of weeks, final dividend of 3.8, books closure 21st May. Our trading ideas, long-term, best strong stocks. Of course, most of these tend to be on the blue chips. Long-term buy on EABL, recovery of financial performance, outlook of diminishing risk due to pandemic lockdowns. We've seen, as we mentioned last week on Friday, things start getting back to normal, or the new normal. We've seen a couple of joints overcrowded. We've seen guys have started to go out, guys have started to accept one another. The social distancing right now is not as it was over the last couple of quarters. So as such, you expect EABL to continue benefiting from these, and also due to their sales, home-based sales, which were quite high. Over to you, Damaris.
Thank you for that. We'll definitely be keeping an eye on EABL. And Churchill, I forgot to mention, when you wrote OMO, I was a bit shocked, and I learned today that it means open market operations. So thanks for that, gentlemen. Over to you, Mathew, to take us to our global financial market.
Thank you so much, fellow panelists. Let me share my screen. Okay,
Yes.
cool. And as I begin, thank you, Damaris and Churchill and Ngige. Good week, second week of March. And even as we start this, I just want to wish everyone, the ladies who are in this call, and even everyone else who will be following on this, happy International Women's Day. We are proud of you. On the other side of the opportunities in the global markets, let's look at what has been happening last week. We're looking on to the oil prices that have hit the highest levels in 14 months. Of course, we had the OPEC Plus. Remember, it's one of the things that we were waiting for, the OPEC Plus meetings, and of course, waiting to see whether they're going to extend the output. That was amid concerns of production and demand. And of course, we saw what happened last week, that they are now going to maintain their cuts all the way to April. And that one has, what it meant for oil, it just maintained the current demand, right? And that's why we've seen the oil, US oil, UK oil springing all the way up, hitting the 70s levels. Currently, if you check on the markets, you see the oil is, for the UK oil, just around the 70s, really going high. And US oil around 67, really an uptrend because of the oil cuts. US dollar strengthening, as of course, bond yields continuing to rise. On the last week, again, we had an eye on the non-farm payrolls, and when they were released, of course, the employment data was really high. We were expecting from last month's 50,000. The expectations of the market last week was 100 and like 3 times 186, but it came up way better to all the ways of 380 something. That was really impressive. Made the dollar quite strong, and of course that had pressure on the gold prices, and of course the US indices still getting a lot of pressure. Last week again, US labor market, that was the biggest news that was really moving the dollar. And we're talking about the unemployment falling all the way to 6.2. It was at 6.3 It's slowly falling, so it's gradual, falling to 6.2%. That's what was driving the markets last week. Now this week, we're looking up to an economic calendar, again, concentrated so much on, again, on the consumer price index or the inflation numbers for the US, looking over to the European Central Bank on their interest rate decision, and also on the Bank of England. Those are going to move the market. So today, Monday, watch out for the speech by Governor Bayliss, that is the governor of Bank of England, right? For the ones who take advantage of the Swiss franc, again, unemployment rate there might give you some good moves. But this week, watch out for the inflation numbers, the CPIs, the US, and the interest rate decisions by European Central Bank. And on that note, let's check out on two products here. We're going to talk about the USD CAD, USD Canadian dollar, and also look at the Euro USD. And because of the news expected, of course, the inflation news expected on the US side, that's the CPI, and on the Canadian side, waiting to see what they're going to talk about the monetary policy, but we're expecting that it might remain unchanged at 0.25. That is the interest rate. If it remains unchanged, then it means, of course, when expecting some news and the rate remains the same, it means that we maintain, there's a likelihood of the current trend being maintained. So we'll have to wait and see what happens there. Of course, they're still keeping their weekly pace on quantitative easing, asset purchases, and of course, generally the Canadian economy is expected to contract the first quarter, maybe improve towards the second quarter. But again, we have to see that as news unfolds. So very important, check out on that rate when it will be released. Might give us some insights into the market. Currently, we have the USD CAD. If you check out on the USD CAD on the daily time frame, it's on a downtrend, trading before the moving averages. But here with me, I have the 4-hourly chart just to get a more clearer short-term outlook. You can see that the price is around the 1.265 and just like trading within a bound between 1.2600 and 1.27. So depending with how the news are going to come up, of course, on the inflation, we know that the US dollar is getting quite strong. And depending on how the news come up on the monetary policy might change or might cause some changes here, but we're looking forward to see whether the currency pair is going to breach the lows of 1.2600, of course, because of the whether we have the weakening of whether we have the strengthening of the USD keeping up, then you might see the currency pair testing above the levels of 1.27. If it's able to break, then again, looking forward to see whether it's going to test the 1.28 levels. So it's very important that those technical levels are very important, but the best way to trade on those levels is wait for the test, or of course, that's what is going to be around the news when they are happening. Wait for the tests and make sure you get a confirmation to have a good setup to enter. So that is the lookout for the USD CAD this week. Going forward to the Euro USD, of course, due to the inflation numbers that we're waiting for the USD on the US side, and the ECB again looking forward to their interest rates, and of course the quantitative easing. But of course, it's expected to proceed or keep on the quantitative easing, 1.85 trillion euros through to 2022, right, March 2022, and that one means that the European side might be reeling into that weakness for quite some time, and if the US maintains the strength, we might see a continued downtrend. So the levels we have there, if I can just take you to the daily time frame, you can see the Euro USD has maintained an uptrend all along from May 2020, and of course that's easily out of the appetite for the safe haven, euro as a safe haven. But you can see now as the US dollar now is strengthening, we're seeing this breaking the trend, that trend which has been holding on since May 2020. And of course, the crossover, those moving averages there. So we're waiting to see whether they will maintain that. And of course, the news that are going to bring that big impact. So the technical levels to watch out for is at 1.1800. Currently, it's at 1.909. So we're waiting to see whether it's the weakness of euro will continue, and then of course it will test the levels of 1.88. But again, if it gains some strength, then of course if the dollar weakens, might see it again testing the 1.200 levels, and then maybe if it breaches that one, going all the way to 1.21500. Those are the technical levels to watch out for euro USD. But currently, what's happening? It's trying to breach that trend which has been holding since May. So you might check out and see whether the weakness continues and get some positions out of that. So on the stock side, these are the companies to watch on the expected earnings when they're releasing the expected earnings on Tuesday. Those was there, IITV, TGS. Wednesday, watch out for Adidas there, right? DocuSign Thursday, Friday. All those companies, when they are giving their earnings report, remember it shows the direction of the company, right? If it's an increase, then it means that it's an expectation of growth in the future. So check out for those ones on the platforms. You can check out for good setups. Of course, the best time for you to enter in a trade when you're checking out for these patterns, make sure you find a pattern that you know how to trade. Maybe, for example, breaching technical levels and that kind of things, looking for one to enter, and of course, having good targets. Companies again that are going to, that you can look out based on the dividends announcements, all of those there. Nvidia, Tuesday, Wednesday, Home Depot, and right, check out for those ones. Remember again, when these are the expected dividends, when the reports that come up are better than the expectations. Of course, it's an expectation that there might be growth in the future and it's an opportunity for you to go long. But if again the announcements are way worse than the expectations, sometimes it pushes forward an expectation of weakness, and might want to wait for a good pattern in the market for you to enter. And for this week, that's what I have for you. Over to you, Damaris.
Thank you so much, Matthew. That was insightful. I have a question here for you from, there was someone, just one moment, Jacob Karoki. He wants to find out how you can trade on FX Pesa. I know he's asking if it's a different platform from Genghis's Jekuze, but perhaps you could walk him through the process of onboarding on FX Pesa.
Good question there, Jacob. Well, so with FX Pesa, if you want to start, the easiest way is to go to fxpesa.com platform and register a demo account, because we advocate you learn fast. On the demo account, you practice risk-free with free money, right? Virtual money, that's how you practice and understand. Once you understand, of course, we take you through the process. You register to our webinars, and again, on the fxpesa.com, once you register, we take you through the education. You practice on the demo account. Once you understand, then that's when you register a real or live account and start trading on it. Our platform is quite friendly. So one way, go to fxpesa.com, register a demo account. Another way, you can send the text join to 40184, and our account managers will be in contact with you again and book you to the relevant training sessions for you to learn.
Thank you so much, Matthew. I'm sure we will delve further into it. If you could start your presentation, that would be great, and then we can move to the Q&A. Thank you so much, Matthew. So I'm seeing lots of questions this morning, which is always exciting. So who do we start with? I can see the gentlemen have appeared. Churchill. Vincent Gakunga wants to know, how can he trade in bonds or T-bills? And what's your take on Williamson T? So I don't know if you take bills and bonds, and Kevin can take Williamson T.
Okay. Thanks for the question. Starting point is for the client to get a CDS account, and based on after that, CDS account with the CBK and not the one with the CDSC. So once you have the CDS account, that gives you the unique login for you to be able to start trading either T-bonds or T-bills. You can now trade through Genghis Capital. We really like you to trade through us, or you can now trade directly through the Treasury Mobile Direct. So there's that application where you can be able to do that, yeah. So I'm not sure whether Kevin is ready with the Williamson T question.
Yes, I am. Thanks, Churchill. So the question, Williamson Tea is one of highly regarded agricultural stocks. I think it's one that is not as liquid as we might say, as the rest of the sector, the agricultural sector. We've seen that with Lemoruti, we've seen that with Captura, and now we've seen that also with Williamson Tea. It's not really liquid, but it's one of the best stocks, especially when it comes to dividends, and when it comes to, it's only held by a few. So we've seen their shares outstanding as a percentage of float at 36%. So it's not something that will easily trade. And I think we've seen an average trading volume of around 1,800 shares. So yes, it's a good stock, but not highly liquid. So depending on how you take that, you might either be happy that it's held by a few, or you might suffer from capital gains due to its liquid nature. Damaris.
Thank you so much. The next question is actually being asked by Wallace, Mburu, and Kamau. And I've seen, Kevin, you've typed out a response, but maybe for the benefit of all attendees, we could talk about NMG. So Wallace said he'd missed a story on NMG buyback. If you could kindly elaborate and give the week's projection for the same. While Kamau wanted to know, on the NMG rally, when does one exit? So I know we'd covered this topic comprehensively on our Friday financial chats, but I think it's just good for us to spend like a minute discussing it. What say you, Kevin?
Okay, so share buybacks, as I told our dear client, it's a new thing in Kenya. Capital Markets Authority had, I think, last quarter came up with new directions about share buyback, and there are several reasons as to why companies might want to come back to the market to buy shares. One is, and I think one of the biggest, is to show investor confidence, is to show that they actually believe in their own company. So it's usually, we've seen that a lot in the US, especially when the prices are subdued, the company will come back, buy back their own shares, and we'll see a rise in the company's valuation through the price. So Capital Markets Authority, in their directive, told companies they could buy back shares up to 10%, as long as one, they disclose it in advance, disclose the natures to which they're going to buy back the shares, and report post the buyout. So we saw NMG come back to the shares and say they're going to buy 10% of their own shares. They've not given much guideline on as to how, and again, as this being a first, as to how this is going to be handled. But yes, that's the recent price rally that we're seeing is thanks to that news. I don't know if Churchill has anything to add to that.
Yeah, so the rally is just based on the announcement, the share buyback, but you haven't gotten into the specifics. What price will the 10% of those shares to be bought out, what price will it be bought out from? So there are some nitty-gritties that we still haven't seen, but of course, investors have been rallying with the price. I think last week it rallied, it went up 25% on a week-on-week basis, just on that announcement alone. So we're still waiting for the specifics, which will also guide to the extent of the rally, or yeah, that's the next phase of announcement that you're going to. So back to you, Damaris.
Okay, thank you. I want to take Kamau's second question. He's asking, in which ways will the referendum affect the stock market? Churchill, some macroeconomic perspectives on BBI referendum.
Wow, it's two ways to the question. One is to look at the specifics in the Constitution of Kenya Amendment Bill that might have an impact on either the listed companies or even in the government bond space. So to be honest, I haven't looked at a direct relations. I haven't seen a direct relations on how it will have an impact on the listed companies, just looking at the bill itself. But of course, you can somehow imply the direction on even its impact on, say, government spending. Because of that, there's a 35% increase allocation to the counties. So that means is that a large portion of the revenues that is raised will now go to the counties as opposed to the national government, and of course that has an impact in the to the monies that is spent to the national government and ultimately the borrowing, even in any given financial year. So that's one perspective to that. The other one is now the whole referendum process, whether there is some political noise and whether it will have an impact dampening investor confidence. Right now, at least there's some area of clarity. Last week, we saw both parliaments coming out with some motions to the effect that giving direction on how both houses in the parliament will be able to debate this particular bill. And I'm sure that this week, unless I'm wrong, the process will now start getting traction. And I think there's a what is it called? There's a High Court ruling that is due to be made next week, just to look at some of these issues that a number of people have brought out in regards to this whole process. So that is the major curveball to the whole legislative process, which has started getting traction, at least in the parliament. And then after that, we can now get into the next phase of now the referendum. I think there's a 3 months timeline. So the major thing that I'm seeing, which will have impact in investor confidence, is now say these uncertain things that we haven't even foreseen at this point in time. But in terms of the process, at least there's some clarity, but the curveballs is what will dampen investor confidence. I'm sure that even Kevin, when he discusses with the foreign investors, these are some of the concerns that they bring about here. So the uncertainty is what will determine the extent of investors either flocking back to the bulls or fleeing from the bulls. So back to you, Damaris.
Thank you for that, Churchill. So I wanted to answer a couple of questions as I give you guys a short break. Festo Maish asked, what is the connection between Genghis Capital and FX Pesa? So in June of 2020, it seems so long ago, Mathew, I feel like we've been together for so long, but in June of 2020, Genghis Capital and EGM Securities entered a partnership that allowed Genghis Capital to give their CDS clients, their share trading clients, an opportunity to onboard onto FX Pesa with minimal KYC, with minimum account opening requirements. So if you're a Genghis Capital account holder, you have a CDS account, you can then go to FX Pesa. We can provide you with a link. You just need to chat us on any platform, whether it's Jacuzzi, on social media, on email. We provide you with a link, you click on it, and as Mathew said earlier, you can either open a demo account to just get a feel and practice the trading and get familiar with the platform. And then after that, you can open an active account and you'll not be required to provide all the account opening information you would typically need when you're opening up an account. And as Mathew has been with us for several weeks now, he's expressed to you the opportunities that are in the global financial market. So the whole essence of our partnership is, on top of the local financial markets, there's also a world of other opportunities. So the partnership was just to grow the offering. Mathew, did I do our relationship right?
Yeah, quite right. Maybe to add something that, again, you see, when you're investing here, you're holding your stocks for quite some time. But again, we have, you can hold assets even with Genghis that can give you short-term income, like unit trust, if I'm not wrong, and I rates and T rates. But again, if you want very, very fast and short-term returns, that's where you have it on FX Pesa. You can speculate into the markets, and within a very few minutes, maybe hours again, and maybe days, you can have your positions and make some profits. So again, an opportunity for you to like get into other markets, European stocks, all over the world, and you can get short-term income out of it. So great opportunity for all of you.
All right, awesome. Thank you, Mathew. So I want to touch on Martin Murimi's question. He wants us to touch on the Kenyan derivatives market, and it's been a minute since we've talked about derivatives. He also wants to know how one can trade through Genghis Capital or open an account for trading. So Kevin, Churchill, who's going to answer this question? Kevin, feel free to even grab David Micheke. Guys, David Micheke is our dealer who's sitting right next to Kevin out of the frame. Who, yes, that chap over there. He is our derivatives guru. Wave to the people. Okay, he's not waving. But in his absence, maybe one of you could answer this question on the Kenyan derivatives market. Kevin, you're on mute.
Sorry about that. So the derivatives market is still a very nascent market. I think we only just started trading around last year, but one, if I have my facts right. We haven't really seen uptake on volume, of course, due to some of the structural issues we have within this country. We know derivatives is a big thing in Mathew's markets and UK, US to be specific. We haven't really seen it take that much form. And again, we only have a couple of only a portion of the whole entire derivative suite. So we have the stock options where we have only a couple of stocks, I think 5 or 6 to be exact. And that's, you know, your Safaricom, your BT, your EABL, Coop, KCB, and a couple of more banks. So we haven't really seen much action there. We don't have a well-structured liquidity provider. Our institutional clients as well as the foreign clients haven't really taken it up. So as such, we haven't seen as much action on it as we might have seen on equities, say, for instance, where we have 85% foreign participation. So it's still a very nascent market. Of course, there are all these plans to grow it. And I saw someone asking if you're going to incorporate it into our app. Hopefully, Damaris, you're going to tackle that. But it's a market that I would watch for now, really. But if you have to hedge against your equities exposure, then yes, it's somewhere you'd want to participate in. Churchill?
Yeah, just to piggyback on what Kevin has said, it's an opportunity. Ideally, you can, mainly the value add here with derivatives is either you can go short on any of the 6 equity derivatives, or even on the index, as opposed to now going long, whereby right now, if you buy, you either buy a stock, a share, you ride that uptick and you sell and then you exit. But now with derivatives, you are even trading, betting that it will go down. And actually in this week's weekly report, we have one of the out of consensus trading ideas is on Safaricom. Safaricom has a derivative, and there's each with the derivative contracts that are there at the NSE, they have expiry every 3rd Thursday, the end of the quarter. So the next expiry is next Thursday. The 3rd Thursday of this month is next week on Thursday, which should be on the 18th of March. And then we go to the, after 3 months, I think the third Thursday in June, then September, likewise, and December. So right now, the trade that we are looking at, you can short the derivative that is expiring in June, the 3rd Thursday in June. So we are looking at a take profit of 35. So by short is right now, think of it, Safaricom is around 38, 37 shillings. So, and that same price is also what you can get at the derivative option. It's around that price, 38 thereabouts. So by shorting it, so you're looking at it going down. So when it hits 35, you can exit, make a profit, as opposed to just sitting down there. And as the stock goes down, in our view, we think that it's right now, there's that sentiment that propelled Safaricom to the levels that it is, but it hasn't come into fruition. So there's still some scope for the counter to come down. So hence, you can take the opportunity of that in by shorting the June Safaricom contract. I hope I've made some sense. Yeah. But for further details, we can connect you to our derivatives dealer, a gentleman named David Misheke. So back to you, Damaris.
Okay. Thank you, Churchill. Thank you, Kevin. And to answer Charles Ouma's question about incorporating derivatives trading within Jacuzzi app, I think the concern is that derivatives trading is for what they call a sophisticated investor. So there is some risks, or rather, it's It's an unorthodox investment tool. So for someone to trade in derivatives, there's a certain amount of prerequisite information you should have. So including it on the app is that challenge, because the app is all-inclusive. It's for our share trading and our unit trust clients, and we offer guidance, but derivatives is very specific. So for now, if you want to trade derivatives and you can't trade derivatives with Genghis Capital, you just need to engage with us. We'll open an account, and then you'll be given access to the Avento system, I believe, that will allow you to be able to trade, or you can do it through our dealer. So Charles, I hope that answers your questions. I'm so happy today. I'm seeing lots of stuff coming in. So I am going to try and answer them in the order they came in. The next question I saw is very interesting. It was about fiat currency. Yes, Peter Irungu. Peter Irungu is asking, what's your opinion on fiat currency validity in terms of, can we account for the total amount of money in circulation, bearing in mind that banks create more money through loans, something he calls magic money? Churchill, do you want a minute to think about it?
I'm sure Matthew is itching to answer that because it's more or less related to the last discussion that was there, the thing about Bitcoin. So I'm sure Matthew or Kevin might chime in at this point.
I can rescue Matthew. Or Matthew,
maybe a little bit to throw in, but of course you'll have to come in, Ngige. You see, when you talk about the fiat currency, of course, all the money which is held in an economy, it is not held in physical fiat currency. Most of it is in digital form and in circulation with the banks. But again, the magic money you're talking about in the banks, remember there are different ways that you have money being made in an economy. And it has to be through the circular flow of income, where you have industries and other companies employing people. And when they employ them, they pay them. When they pay them, then they again go to demand for the same products that they worked to produce. That's one way that you have money being made in an economy. So when you come to the banking sector, we're talking about banks taking deposits and then giving out loans. Of course, there's some required reserve that the banks have to maintain with the central bank, of course, to make sure that, of course, it covers for a likely events when you want your money back. So really, it's not magic money, because that's the normal way of creating money through the banks. They take, if for example you deposit $1 million with the bank, what they will do, they retain a certain percentage that they are required to maintain with them by the central bank, and then they lend the rest, right? And that money will go into the economy. Of course, the creation is backed up by real economic activities, and with that real economic activity, the money finds back its way into the bank, and it's really quite normal. So about the fiat money being held, it's really, I can't speak more about the legitimacy or how much, how we can account for it. Of course, that's the work of the central bank. But again, about the circulation of money and the banks being there to help in creation of that, of money, it's really very, very valid. Kevin Ngige can make it more clearer.
Okay, mine is just maybe to echo some of the sentiments you've just said, and to answer the client is the central bank, as you rightly said, is the sole organization that accounts for money and money supply. But maybe one thing I might want maybe to point out is that in macroeconomics, money supply is the total value of money available in an economy at a point in time. So at any measure point, be it you measure quarterly, half-yearly, or annually. There are several ways to define money, and that's where the big catch usually is, and where different central banks differ. So we might want to look into how our CBA defines money. And I think for us, it's the money one in circulation and the demand deposits. These are easily accessible equities, short of like those money market funds or deposits with the banks. So we have several various ways of measuring this money. So regardless of the, whatever form it is, so we have the M1, M2, M3 money supplies, and all these are publicly are published on the CBKs. So there's no really ghost money. All money is accounted for in the circulation.
Thanks, gentlemen. Let me just hold forth for Damaris briefly, who's just stepped out. So there's, let me just speak to this question on the chat from Ken. Could you speak more about the GOK roads bond that I read in the BD today? So let me just tackle that one as Damaris comes back. So the thing is, the roads bond, there was a bill that was passed in December 2019 to the effect that the Kenya Roads Bond will be issuing bonds, at least to be able to fund those road projects. And it was taking a span of, I think, 10 years. So, and the Budget Appropriation Committee, it had a report on the budget policy statement. It tabled the report last Thursday, and then it the National Assembly approved that report that had been tabled. And one of the things that the BAC, now this is the committee, mentioned is that there were to the tune of 240 billion spending requests by some of these ministries. And one of them was that 75 billion had been brought by the State Department, Ministry of Infrastructure, State Department of Infrastructure, 75 billion. So the idea was that that will be floated by a roads bond. But having said that, I know that I still am at odds. I'm taking a contrary opinion from the article, because just speaking with some people in the know, there's not been a roads bond that had been issued before. Right, the bill was passed in December 2019, and then there was high expectation that from last year, we could be seeing a roads bonds being issued by Kenya Roads Board, but that hasn't taken traction. It's only that now it has been preempted in the next financial year. So that's the information that we have, that Kenya Roads Board is to issue 75 billion roads bond in the next financial year, at least to support the roads development projects. So that's our view on that. So welcome back, Damaris. I touched on the question on the chat, so you can pick up on the ones on the Q&A.
Yes, thank you so much, Churchill. I see Kevin's been answering several of these questions, but maybe we could just reiterate them for the guys who possibly are not seeing the Q&A. But Kevin, awesome job. Thank you so much. So we had Joseph Arel who asked, what was the possible driver for Sanlam price to propel it to being one of the top gainers of the week, considering that it issued a profit warning? Maybe just a concise summary of what you shared with him directly.
So as I was telling the client, is Sanlam just reported, I think last week or last week, but one, that they reported a prediction in the numbers, in the profits for the year ended 2020. So as such, of course, we expect the share to be punished. We don't foresee anything significant. I think that also disclosed, or rather in the previous, again, year-on-year numbers, they also had a decline, I think by almost 25% or more. So I looked into the trading data for last week, and I just realized that the share was up on a mere 3,200 shares. So that's not really significant to, yes, it was quite illiquid, but then again, if you trade 100 shares at 10% up, it could book it as a top gainer, but that doesn't hold any water.
Okay, understood. Thank you so much. Richard Mwangi, thank you for the kind message on International Women's Day. He wanted to know our take on Kenyan at the current price.
Again, I'll take that. I think as I told the client is, I think on the beginning of last month, I think it was around 1st February, research, and Churchill is here. I'm sorry to take the shine from him, is that we, on the note, we predicted the long-term, or we advised the long-term buy of Kenyan. This is based to a couple of things. One, there was the pleasing numbers. Of course, they have very solid numbers, normalized bottom line, I think over double digits, I think to around 17%. They've maintained and actually increased their dividend to around 30 cents, and of course, future capacity that they do have. So to us, yes, Kenyan is a good buy, and it's one of our long-term buys.
Okay, fantastic. I think you also have answered Stephen Gacheru's question in terms of Kenyan as well. John Kamau, I remember Churchill, you were talking about Safaricom pricing when you're talking about the derivatives contract for Safaricom, but John wanted to know if Safaricom is likely to get to 35 this week. But Kevin, please also field this question. Hello?
You're breaking.
Will Safaricom get to the 35 level this week? A question by John Kamau.
For me or for Churchill? All right, I'll take it. Sorry, Churchill, go on.
Well, it's hard to pinpoint the exact timing of this psychological 35 shillings, whether it will be this week. It's hard to tell, but we've seen that 40 shillings per share proved to be like a resistance level, and it tended to be like, that was the next psychological barrier that investors are looking at, but it hit a high of 39.25, but after that it's been coming down. It's hard to tell. I won't commit against a timeline that will be hit this week. I'm sure that Kevin now has conversations with some of the foreigners. We see that foreigners have been quite busy trading on Safaricom. The previous 3 weeks, they were accumulating on Safaricom, and then last week they reversed that trend. We saw that they were, for at least in the last 4 weeks, they turned net sellers on Safaricom. So perhaps that could be the proximate cause of further decrease in Safaricom's price. I'm not sure whether Kevin might have some other views.
No, Churchill, I think you've covered it quite much. To be fair, I think it's guaranteed. Oh no, I'm sorry. I think only death and taxes are guaranteed. It's expected that Safaricom will have a drastic reduction in price this week. Of course, one to cover for the dividend they've given. So most of the capital gains we saw last week and the prior weeks was due to the 45 cents dividend. So of course, you expect faster reduction by 45 cents, if nothing more. But then further, I looked at the technicals, and yes, I did a note on that, and we saw that Safaricom might get to 35 levels. Of course, not this week, and we can't predict exactly by when, but it is our expectation that it is my expectation that it will get to the 35 levels. Damaris.
Thank you, Kevin. So we anticipate the 35. Chris was asking how one can participate in the Acorn iWrite, and Bernard Onsongo is also interested in this particular question. So who would like to talk about the iWrite?
Honorable Churchill.
It's actually DREIT development real estate investment trust. So that's the full name of that. So the idea is Acorn had listed the green bond in early last year, which was now cross-listed on the London Stock Exchange. And the idea was that once they've gotten the monies from that green bond, they had identified 10 projects now to be funded from the monies from that. And for every project, they intended now to have a sort of a development rights, development real estate investment trust. So that is what, that is the thing that was kickstarted. I think it was two weeks ago, and it's under the unquoted securities platform. So the Acorn DREIT is not easily accessible to, like the way you can be able to trade shares. It's like an over-the-counter, and primarily they were looking at some select investors, so similar to the private placement. So rather than having an initial public offer, the way we see it with shares, so they identified a pool of select clients, and then that's the market that they had, that's the route that they want to go with it. So unfortunately, for a client who wants to get access into that, unless you fit the criteria of the target investors, unfortunately, it's not available to all to be able to participate. So that's the thing about the unquoted those unquoted securities platform, unfortunately.
Churchill, how do I know if I fit the criteria?
No, I think they give some guidance on that, and I don't think it's available for the retail investor. I think locally it was available for institutional investors, and then of course foreign investors. So unless you fit the criteria of an institutional investor, which means a local established company with funds under management, probably, I don't think it's up for retailers.
Okay, all right, duly noted. Bernard Onsongo had 2 questions on private equity in Kenya. So his first was, what is the future of private equity in Kenya? And does Genghis give guidance on private equity? And he also wanted to know if there are laws governing private equity in Kenya. Would someone comment on this?
Churchill's field. Churchill's forte.
Okay, thanks, Kevin. So if you think of the investment landscape, so on one side you have the public investment space. That's where you can buy shares, you can buy bonds, and on the other hand, you can now think of this the private equity, the venture capitals, which is different. So you think of the capital markets as broadly defined into those 2 broad-based categories. So as Genghis, we are not in the private equity space because our mandate and our license as intermediaries is just between stock brokering, corporate finance, and also the buying and selling of bonds. So the private equity space is a totally different ballgame. But having said that, because you've asked whether, I think the other question was on, just remind me, Damaris, I think it was something to do with regulation.
Yeah, laws governing private equity in Kenya.
Yeah, so the thing is, I think there's a bill that is in Parliament, unless I'm wrong, which now wanted to bring all these private equity players, the venture capital, into the purview of the capital markets. Right now, they are somehow not under the direct purview of the capital markets. So that sort of a legislation wanted to bring them all under the capital markets regulation. So at least even the pension funds can be able to benefit, get access into the private equity market. I haven't seen much traction in how far the bill has gone to bring into these kind of players under the capital markets purview. But I think the end game of that is at least to be able to ensure that even the pension funds can be able to access that kind of a market. So that's what I can talk about currently on that question.
That's excellent. So Bernard, I hope your questions have been adequately resolved. I would just like to cover one thing before we go to the final question of today's briefing. I'm happy to report that Jekuze is back online. So there was John Kamal who'd asked, as well as Charles on the matter has been resolved, and you should be able to execute those trades for today. So we're very excited. So the final question, I'm going to split it perhaps between Kevin and Churchill, and then maybe give Mathew final remarks. But what are your sentiments on Saseni Tea and Bamburi stocks in the near future? I know we talked about Williamson Tea, but now Saseni Tea and Bamburi.
I'll maybe tackle Sasini and leave Bamburi to Churchill. Again, as with agricultural stocks in Kenya, these are stocks that are really valued. The only and the biggest challenge that we have, one, is liquidity. So that means the number of shares available for trade. For instance, a company like Equity, I think, has around 3.7 billion shares to trade, Whereas on Sasini, I think the free float is around 25% only. So that has been one of the biggest hindrances to guys accumulating on agricultural stocks. It's not easily available when you want to buy, and might not be easily there might not be an easy market when you want to exit. Otherwise, we've seen it trade at around lows of 14.80, highs of 20, averaging at around 17.5. I think as of Friday, we were trading at 18. So we've seen double-digit increment in price year on year, so at around 12%. So overall, Sasini is a good stock. All the best getting it. Churchill.
So for Bamburi and basically the whole construction industry sector, we're looking at last year, there was that dampened demand in terms of robust activity in the consumption, in the construction sector. But so far we've seen a rebound. I think the data that we saw from Kenya National Bureau of Statistics is that cement consumption has been on a rebound. So aggressively, we are seeing that these sort of indicators are pointing towards a robust recovery, not only for Bamburi, but across the construction sector. So though we are not actively covering the sector to give comprehensive guidance on that, but we can take this question offline as we dig further information around that. But compared to last year, we've seen that that whole COVID-19 has already done a 12-month round trip. But so far, at least, we've seen some progress in terms of recovery in the construction industry, and also the huge capital expenditure, public capital expenditure by the government just solidifies the view that at least there's recovery.
Thank you so much, Churchill, and thank you, Kevin, as well. So I believe we can now wrap up. Mathew, are there any parting shots before we conclude?
Well, of course, I would not like anything to say. Every day we present this information about the events coming up and the technical levels. Maybe to reiterate more on these, when you're trading on Forex, make sure that you are very aware of the events which are happening. And these events around these economies, talking about the inflation on CPI news, PMIs, the direction of the economy, that the release by the heads of those central banks from those various economies that you're looking out for. And of course, to check out where the interest rates are going. That's very important. And if you can combine them with the technical levels, because that's where the buyers and sellers find opportunities to enter the market, that would be very nice. And just to add on the derivatives, there was a question about derivatives and someone asking about how is it likely to be. It's a new environment here. And of course, more sophistication coming in. And I'm not speaking for the management, but maybe in the near future, we might be having offers for you, opportunities for you to take advantage of the NSE 25, maybe and other few derivatives that you can take advantage of. So just keep watching this space. Good news and good things coming up for you.
All right, awesome. Thank you, Mathew, for that. And stay informed and educate yourself is the key takeaway I'm having from your final words. So thanks so much. Thank you, Kevin. Thank you, Churchill. And thank you so much, all attendees. We've loved having you here for our weekly investor briefing. Have a great trading week ahead. And let's meet next week, Monday, for another opportunity to discuss. Thank you so much and goodbye.